Welcome to VitalCash, your go-to channel for insightful financial wisdom. In today's video, we're delving into the 6 keys to success with Warren Buffett. Warren Buffett, often hailed as the greatest investor of all time, has achieved legendary success in the financial world. His success is not shrouded in mystery. Rather, it's rooted in a few fundamental principles that anyone can integrate into their daily lives. As we explore these principles throughout this video, you'll gain insights that can potentially transform your approach to investing and decision-making. Stay tuned, because by the end of this journey, you'll not only grasp the essence of Warren Buffett's investment philosophy, but also discover how to apply these principles in your own life. Let's delve into the mind of the Oracle of Omaha and unravel the secrets behind his unparalleled success. The essential triad in people selection. Warren Buffett, besides being a master of investments, reveals a unique perspective on people selection. In his approach to building winning teams, he emphasizes 3 fundamental qualities: intelligence, initiative/energy, and integrity. The first characteristic, intelligence, is crucial but not sufficient on its own. The second, initiative/energy, represents that internal drive that transforms potential into action. However, Buffett emphasizes that without integrity, the first 2 qualities can become dangerous. If integrity is lacking, intelligence and initiative can turn into destructive tools. Buffett categorically states that if a person lacks integrity, the absence of this quality can negate the benefits derived from intelligence and energy. In other words, when seeking collaborators or partners, integrity is the pillar upon which to build. This principle is not just an observation by Buffett in the context of his hiring decisions, but also valuable advice for all of us. Recognizing and evaluating these 3 qualities in people can guide us toward more meaningful connections and stronger relationships in our personal and professional lives. The triad of intelligence, initiative or energy, and integrity becomes a beacon for selecting the people around us. The psychology of investors and market opportunities. Warren Buffett, acclaimed as the greatest investor of all time, unveils valuable insight into the psychology of investors and the opportunities that arise from it. Buffett begins by describing the human behavior of investors during bull and bear markets. During bull markets, enthusiasm prevails, and investors, influenced by recent success, feel optimistic and eager to ride the wave of prosperity. On the other hand, during bear markets, fear takes over, and investors, witnessing recent losses, retreat. Buffett's key advice for investors is to distance themselves from this herd psychology and remain rational. Where others see only euphoria or panic, Buffett sees opportunities. He emphasizes that investors often focus on the recent past, acting as if current conditions will persist indefinitely. Buffett's wisdom lies in looking beyond the emotional behavior of investors and instead focusing on the fundamentals of the business. Regardless of prevailing enthusiasm or fear, true investors stay calm and carefully assess the underlying economy and the soundness of the companies. This teaching from Buffett encourages us to resist the urge to follow the herd and to act independently. Investing requires patience, discipline, and a long-term view. Don't be swayed by the emotional swings of the market, and you might discover hidden opportunities that others overlook. Investment mistake and learning from loss. Warren Buffett shares his philosophy on investment mistakes, emphasizing the importance of learning from one's losses. Buffett openly admits to making mistakes throughout his career, highlighting that these are often omissions rather than outright wrong actions. A concrete example provided by Buffett concerns a missed opportunity with Fannie Mae. At a time when the company was facing troubles, Buffett could have acquired the entire company practically for free. However, fear or uncertainty led Buffett not to act, resulting in an estimated loss of several $billion. The key lesson here is that omission mistakes can be more detrimental than commission mistakes. Buffett emphasizes that these errors often don't show up in traditional balance sheets or financial reports, but manifest in the missed profits that could have been realized. This underscores the importance of evaluating not only what has been done, but also what has been overlooked. The wise investor, according to Buffett, learns from such mistakes and commits to continuous improvement. Buffett's frankness in acknowledging his errors demonstrates his humility and dedication to constant learning. Ultimately, he encourages investors to reflect on their actions, be they commissions or omissions, and seek learning opportunities even in losses. This ability for self-assessment and continuous improvement is crucial for long-term success in the investment world. Choosing big and right opportunities. Warren Buffett emphasizes the importance of recognizing and seizing the right opportunities in life and investments. Buffett advises focusing on a few fundamental things, but acting decisively when a significant opportunity arises. Buffett uses the metaphor of a punch card to illustrate this concept. Imagine having a card with 20 holes representing the most important financial decisions of your life. Every time you make a major financial decision, you punch one of these spaces. This exercise forces you to think carefully and not waste opportunities on irrelevant choices. His metaphor reflects the concept that, in life, there aren't many extraordinary opportunities, and wasting them on secondary decisions can prevent you from seizing truly relevant ones. Buffett advises being selective, focusing on what truly matters, and acting strongly when a significant opportunity presents itself. This principle can also be applied to investments. Buffett emphasizes that there aren't many extraordinary chances to make life-changing investments. Therefore, it's crucial to be ready to act when these rare opportunities arise, rather than dispersing resources on mediocre investments. In summary, Buffett's lesson is clear. Focus on the right opportunities, don't waste time on secondary decisions, and when the occasion comes, act decisively. This selective mindset is a cornerstone of Buffett's success in both investments and life. Understanding the intrinsic value of business. Warren Buffett emphasizes the importance of grasping the concept of intrinsic value when investing in a company. Intrinsic value represents the estimate of a company's future cash flow, discounted at the appropriate discount rate. Buffett explains that investing in a company essentially means committing to pay money now to receive future cash flows. Buffett uses the example of Coca-Cola to illustrate this point. If you are considering buying the entire Coca-Cola company, you need to assess whether the money you are paying today is justified by the cash flows the company will generate in the next 200 or 300 years. This concept can be applied to any investment, large or small. The key is to understand how much money the company can generate in the future and whether that cash flow is reasonably certain. This is not only about stocks of large companies like Coca-Cola, it can also be applied to small-scale investments. The crucial question is whether the money you are investing today is well spent for what you will receive in return in the coming years. In essence, Buffett reminds us to think of investments as a long-term commitment and to evaluate whether the price you are paying reflects the intrinsic value of the company. This approach to business valuation has contributed to Buffett's enduring success as an investor and provides valuable guidance for anyone making prudent financial decisions. Seize the right opportunities. Warren Buffett emphasizes the significance of recognizing and seizing the right opportunities. He compares these opportunities to a limited set of punches on a card. Imagine receiving a punch card with only 20 punches as you step out of school. Each punch represents a financial decision, and once you've used them up, that's it. According to Buffett, life presents a finite number of great opportunities, and it's crucial to make the most of them. Whether big or small, these opportunities should be grabbed when they come your way. He notes that even making a small-scale, correct decision is as important as making a significant one. Buffett suggests that you won't encounter 500 great opportunities in your lifetime, so every decision matters. The analogy of the punch card underscores the importance of thoughtful decision-making. Rather than frivolously using up punches on investments you don't thoroughly understand, Buffett encourages a deliberate approach. He advises against being swayed by market trends, superficial recommendations, or flashy charts. Instead, he advocates for thoroughly thinking through each decision, ensuring that it aligns with your understanding and analysis. Buffett's approach is rooted in discipline, and the idea that successful investing requires a focus and measured strategy. By emphasizing the scarcity of great opportunities, he encourages investors to be patient, strategic, and selective. This perspective reflects Buffett's own approach, which has played a significant role in his long-term success as an investor. Thank you for joining us on VitalCash. We hope you found immense value in exploring the 6 keys to success with Warren Buffett. If you enjoyed today's video and want to stay updated on all things finance, don't forget to hit that subscribe button, ring the notification bell, and share this video with your fellow enthusiasts. Remember, the journey to financial success is ongoing, and we're here to guide you every step of the way. Until next time, stay financially empowered, and we'll catch you in the next video.